Are you ready to refi? Mortgage rates have fallen to their lowest levels in decades, so maybe this is a good time to refinance. Joining us is Whitney Tilson of Tilson Mutual Funds. Good morning, Whitney.
Good morning. Thanks for having me.
Thanks for being here. I watched you on 60 Minutes this weekend, and you had very dire predictions, bleak comments about the housing market, but you did say it's a good time to refinance. And when I saw USA Today this morning, I understood what you were talking about. Mortgage rates the lowest in 50 years. How low are they?
Well, they're right now, they've crashed just in the past 7 weeks. They've been declining every week. They're now for a 30-year...
Oh, we're changing your mic here.
For a 30-year fixed-rate mortgage, they've declined to 5.2%, which is a 50-year low. So that's great news. It's about the only good news in the housing market right now.
And they dropped to 5.2 from 5.5 in just like a week.
Just a week ago, and it was over 6% a year ago. So this is good news.
So it begs the question, though, if it dropped so much in just a week, should I hold out? Should I be greedy?
Right. It's sort of like trying to time the stock market, I suppose. I will point out that it could get quite a bit lower soon because there's a proposal floating around in Congress, the new administration is certainly considering, where the U.S. government can borrow 30-year money at 2.5% right now. They can lend it into the banking system at, say, 3%, and the banks can in turn lend it out at, let's say, I've heard a target of about 4.5%.
Wow.
So it's at 5.2 now, could go to 4.5% if the new administration embraces this proposal. Hard to game the odds of that, but it actually, that's the dilemma. Do you grab the 50-year low rate right now or wait a few weeks and you might get a chance to refinance at an even lower rate?
All right, let's say that I decide I want to refinance today. How do I know if I should? For example, if I have an adjustable rate mortgage, I would think that I would want to jump on it and fix this rate.
Sure. Well, normally there's quite a big spread. You have to pay more to get rid of your interest rate risk into a fixed mortgage, so adjustable rate mortgages usually have a quite a bit lower rate, but the fixed rate has dropped so much that now the rates are the same. So you're crazy not to refinance into a fixed rate mortgage, get rid of your interest rate risk, and lock in this super low rate for 30 years.
But the important caveat is if you qualify. If you were in a bad loan, you're not going to qualify for a new mortgage.
That's right. If you're underwater on your loan, if you've missed some payments and all, you probably won't qualify for the ultra low rates. You're still going to benefit, though, because all of the mortgage rates are sort of pegged to the lowest conforming rate. So there's some good news there. If someone's in an adjustable rate mortgage in an area where home prices have crashed a lot, they can their rates are, when their loan resets, let's say they've got a 2-year teaser, it's going to reset to a lower rate thanks to the overall declining mortgage rates.
And if you're a first-time buyer, I guess the same thing applies.
Right. I mean, this is good news. It gives you more spending power at a lower interest rate, and that's good news for sellers as well. Home prices right now are still declining in the bubble areas like California and Florida. They're still in free fall, but this may help ameliorate the rate of decline anyway. Sellers
are so hesitant to sell right now. They just can't come to grips with the reality that their home is worth so little, and they wait and they wait and they wait. You think that's a mistake?
Yes, very much so. You can't anchor on what your home was worth a year ago or 2 years ago at the peak of the bubble. You just have to be very realistic that home prices have declined substantially, and the reality is if you just look at the delinquencies and foreclosures and all that are coming down the pike,
it's not gonna get better.
There's this huge inventory overhang, more than 10 months of inventory of homes. Normally it's 3 or 4 months, and that's putting downward pressure on home prices. So home prices are almost certain to decline over the next year or so. So if you have to sell, don't just sit there hoping that prices are going to rebound. That's not very likely.
You got to live in the real world.
That's right.
So the takeaway today for all of our viewers, 5.2, pretty good, could go lower.
Right.
Up to you whether you want to risk it, but either way it all depends on whether you qualify.
Exactly. If you qualify, you want to start thinking about refinancing and either get in line right now or maybe wait a few weeks and see what happens with these proposals to drop it even more. But definitely you want to be thinking about refinancing.
You say get in line right now, but I'm sure that there's a surge of applications. Aren't you going to wait forever? Right.
Well, from what I'm hearing, the people who are processing the refinancing applications are working 18-hour days to keep up with the demand because people are already rushing to take advantage. But I think there's the capacity there. So it's if you want to refinance, you will be able to. The question, personally, I would probably wait just a few weeks, really, and the new administration is going to announce its economic plans and whether this proposal to drop rates is going to be part of that.
All right, Whitney Tilson, thank you.
My pleasure.